So it is not really hard to make profits in the market if you follow a very simple rule: enter and exit in a right time. So today I'm going to start my analysis with natural gas, gold, and crude oil. So let's start here with natural gas. What I mean by following the rules is right here, we've been taking some nice trade. Let me go back in a replay mode so that it will become really clear for you how we take profits, how we enter trades. So what happened is we only take reversal trades when the market hit the major area of value. If you see, the market was in a downtrend and keep on falling from the major area from the top. Keep on pushing down, push up, hit the minor level, push down, push up. So now while the market was pushing down, once it hit the minor zone, did we expect a complete reversal? No, we did not, because this is not a major zone. Market pushed up, we had this reason to enter. From here, market pushed up, hit the minor zone before the market pushed down. Now it hit this zone, the minor zone. Are we expecting a big reversal? No. Just want to get a good entry reason. Once we have that, take our profit before the market continue its trend and push down until it hit the good big major level of support. Right here, if you see, it did hit right here on currency.com, and since then the market is pushing up. Now what happened is all these zones in between are the minor zones. I will show you the major zone in a moment, but let me show you what I mean by taking your profits once you hit these zones. Now, we were here, and I remember I have sent these trade to my priority members. One of that we got this nice bullish engulfing candle here, and we can expect a push down. And this has happened in the area of value, a minor area of value. So in this place, so now as you can see, market has broken above. We have a pullback, and then right here we got a big engulfing candle. So at this point, what you do, you enter your trade here. The ATR of this candle is 19. Just do 20 here, right here. So 20 here. Now this is also an engulfing candle, and that would be a perfect entry. In that case, I wouldn't enter as a 1 ATR. I would enter. In this case, I would keep my stop loss below 50 EMA. Right here, I'll go 30 pips, and I'll go 30 pips above. Something like this. If this candle would be my entry. So let's see what happens. Okay, right here the target has been hit. At this point, the market has broken above the previous high. Now it is a likely chances that the market will push up from here, and we had a Fibonacci tool here. So what happened is now we have a next minor level of resistance. So we can expect a pullback, and that pullback will be enough to take our profits. We are not expecting a reversal until we are in a good major area of value, a major zone, something like here. Until then, we are only going to take pullback trades once we hit this zone, and we can always expect a pullback. Market always give a pullback once it hit a minor zone. So let's see what happens. At this point, we will look for a sell entry reason and see if we get one. Okay, now if you know I trade on 1 hour and 4 hour time frame, let's go back on 1 hour time frame. What do you see here? You see a nice double top pattern. Market closed back in our zone. At this point, you enter your sell trade right here at this candle. ATR of this candle is 8. We'll keep our stop loss above the top right here, 23, and 23 pips below. The ATR of this candle is 8, but the reason I put my stop loss because this is the zone where we have a protection of a double top. That is why I keep my stop loss above here, or you can even go 1 ATR. Like I said in a single video, I can't explain every single thing, but this is how I use double top trades. Now, let's say the market is here. You have your entry set, you have your target set. Now, what happened is the target has been hit. At this point, we shouldn't be greedy and hope that the market will push down from here, because we have already taken our target. It is a good point to exit your trade. And now let's look for the next reason to enter. So let's see what happened after that. Market still pushing down, and that would be enough to hit our targets. Now, your next goal is to see if the market broken above this high. If it broke above this high, then it's a possible signal that market will continue its trend, as we already got our chunk of profit. So let's see what happens. Market pushed up straight away. Now what happened is we are above this previous high. It is a likely chance that the market will push up in this zone, and this is the minor resistance, and this is a likely chance we will only get a pullback before the market will continue its trend upwards. So let's go back on 4-hour time frame now. As you can see, the market resisted here. If I see a good reason to enter, I will only enter. Otherwise, if I only see a bullish momentum, then at this that point I won't be entering any trade. So let's see what happens. Target pushed up. Right here, what do you see? You see a bearish engulfing candle here on Awanda. On capital.com, we have a nice 382 candle. At this point, I've already informed my members that this is the entry and this is your target. ATR of this candle is 19. Here you can see exactly the 19 pips is my take profit. This is an engulfing candle. That is why I'm taking 1 ATR target. For double top, I keep my stop loss above the top. So right here, if you see, market pushed down. What happened here? Market hit our take profit, and right after hitting the take profit, market formed. Market pushed up, made a new high, pulled back, formed a swing low engulfing candle. This is one of the entry pattern I sent to my priority members. Right here, on the screen, you can see this is the pattern I sent to my priority members, and this pattern happened above all the EMAs, which is a bullish signal. At this point, if you see this type of bullish reason to enter, you take your profit here. Now you look for buy trades right here. The ATR of this candle is 19, right here, 19. Now at this point, I'll be reluctant to enter if my take profit was above this zone. As my take profit is still in between this zone, I know that I can expect a hit of my target and it will be in this zone. We might see another bearish move as we are in a resistance area. That is why my target is not really big and I have my take profit set here. So at this point, you have your entry candle right here, the one you learn in the priority group. What happened is right here, this is the current date now. Right after the hit of your take profit, market pushed down back in our zone. So like this, we get the chunks of profit every time the market hit the major zone. And in between that, if you noticed, what do you have here? Market pushed up, pull back down, engulfing candle. Market pushed up again. So in between the zones, you get an opportunity to buy trades. If you follow these simple rules, then there is no way in the earth you can't come out profitable at the end of the year in the large sample size of your trades. You get a pullback opportunity here, you get pullback opportunity here in the zone, in between the zone. You got a pullback opportunity right here, and now we are in the selling area. At this point, now let's start our analysis from here. What happened now? Even if I go on 1 hour time frame, I do not see any type of bearish entry reason. Now, if we have a push up and we have a bearish reason to enter green and red candle, then that would be my entry to take my sell trades. It is not going to be a reversal trade. I will only look for reversal trades once the market hit the next major level of resistance. Now, what to expect next? At this point, we are still in between the zone. And now, what do we have? We have the previous high that has been broken. That is also a sign that market is can likely to push up from here. If I look my Fibonacci tool right here, we already got a retest of 50% retracement. Looking at that, looking at the previous high broken, we can expect the market to hit at least 8.366, from where we can expect another pullback at this zone, in between this zone, from where we can expect another push up. We will look buy trades until we are here at 9.050. Before that, we do have a minor zone right here. We do have a minor zone which I will update you guys accordingly tomorrow or a day after tomorrow. I don't upload videos on Friday, so I'll keep you updated. But at this point, I'm expecting market to push up here as we are broken above the previous high. So keep an eye here, keep this zone here. I hope you got some value out of today's video. I hope you can able to take your entries and exit and enter at the right time. So overall, the market is bullish, is keep on pushing out, is keep using 20 EMA as a support. Even if we get a push down, we can only expect a push down to 20 EMA before the market will push up and continue its trend. I will only look for sell trades now once we are completely broken above the 50 EMA, or we are going to take sell trades once we hit the next major level, which is 9.050, goes up to 9.394. I will adjust these zones accordingly in my next video. Okay, right here on Currency.com, as you can see, market has broken above the previous high. Now, looking at the Fibonacci retracement, we can expect 50% retracement before the market will push up from here. Now, in on 1 hour time frame, if you get a double top type of move, that will be only a pullback, maybe a retest of 20 EMA before the market will continue its trend again. So overall, it is bullish. I will only look for sell trades once we hit 9.343 goes up to 9.659. So make sure you take your profits once it hit your target. If you see an entry condition, take only 1 ATR for engulfers, and you can have your stop loss above the top. You have a double top move like this, have your stop loss above that, and same amount of take profit below that, and use the ATR for your target. That keeps you with the volatility of the market. So these are the zones if you want to mark on your charts. Let's check gold. Okay, right here we did not get a chance to take an entry here. I've already informed one of my members that I'm expecting a good push up from this zone, but as you can see, we got a big engulfing candle that pushed up. Now I will only enter buy trade if we have a push down again in this zone, which is 1673 goes up to 1685. I will enter buy trades if we have push down and push up again. I will use this as my double bottom entry pattern. Now we are hitting 50 EMA. We can expect push down from here. If we are broken above 50 EMA, then we can expect a trend continuation. And if we broken above 50 EMA, the next target I'm expecting gold to hit is 1759, from where we can look for short trades. If not, then this is the place I will look for my buying trades. Let's check crude oil. Okay, right here, crude oil is being funny now. It pushed up above 50 EMA, had an engulfing candle, pushed down. We had an engulfing. This was a buying signal for me, and that would be a stop loss for me if I would have entered. Now, push down again. As you can see, we have another engulfing candle right here. That is a signal we can still expect push up, not a big one, but we can expect a $2 push up from here. Once it hit 50 EMA, we can expect another fall. So crude oil is just moving up and down nowhere, and we do not have any sort of trend. Yes, I can see this bullish engulfing entry pattern that can push a market a bit. If we are broken above this previous high, then we can expect market to hit the next level of resistance. So that's all for commodity market, guys. If you're getting value out of analysis, please do not forget to hit a like button. It helps me in the YouTube algorithm. Hope you trade green rest of the week. I'll see you guys in the next video. Till then, take care.